everyone, it's Shauna the Tax Goddess and Chief Tax Strategist for TaxGoddess.com, BigTaxDrop.com, and STCLight.com. Super happy to be with you guys here today on our channel, Tax Strategies that Save Entrepreneurs Thousands each year, where we're dedicated to helping business owners reduce their tax burdens in all the legal ways possible. Now, in today's video, I'm going to talk about a really interesting court case that unfortunately somebody lost, but there are ways to fix it, to make it work. So we're going to be talking about a real estate developer who decided to set up a chartering company for his own airplane. So we're going to talk about that. Super exciting. Anyway, basically the difference between active and passive. So we're going to go into that in more detail. So if today is your first time with us here at Tax Strategies that Save Entrepreneurs Thousands, please turn on notifications, subscribe. We would love to have you as a part of our family. And don't forget that you can always download our free ebook, 10 Ways to Save 10K right now. And of course, check out the websites, TaxGoddess.com, BigTaxDrop.com, and STCLight.com if you're looking for ways to strategize on your taxes. So, quick tiny little reminder before we get into the main video. We are having a free webinar on the new tax law changes that are now in place for 2018. It's on May 24th from 11 to noon, lunch and learn. So if you're interested, we'll put the registration link down below for that. So let's jump right into the main topic today. So this one I thought was fascinating. I love the ways that people try to create tax strategies, but as you'll hear here in a minute, if you don't do it right, the strategy won't work for you, okay? So here's the long story short. Really, there was a real estate developer, and, you know, he was making good money, right? And so he bought an airplane, okay? And he set up basically an aircraft chartering business. So he was leasing the airplane to friends, to family, to other people, to outside parties, but he never really made a lot of income on it, and in particular years it looks like potentially he had a loss. And the biggest issue here is that he was trying to offset his super profitable business. Okay, so it looks like his real estate activities were reporting about $1.7 million a year in profit, okay? And he was trying to take the losses from his aircraft chartering business against those real estate activities. Now, normally this would not be a problem. Okay, you're allowed to have multiple businesses. You're allowed to have a business that makes money, and you're allowed to have a business that loses money. Now, you can't always have a business that loses money, right? Because at some point, the IRS will turn that into a hobby, right? You weren't ever actively trying to make money with this company, okay? But you are allowed to have multiple businesses. Where this particular case ran into problems is that the aircraft leasing company is what was considered passive. And what that really means is that there are certain regulations that you have to pass. You have to meet these certain guidelines to be considered active business versus passive business. Now, for this particular court case, the person was definitely active in his real estate business. He was there, he was managing, he was spending time on it, he was definitely making a profit, right? So he was definitely active in his real estate business. With the aircraft chartering business, he really didn't spend much time managing it. He really wasn't there or actively working on the business. You know, he had a manager, and the manager was dealing with that side of the business. So when those losses came through, there's actually the losses and the gains, there's really two different buckets. The losses, the IRS argued and won, that the losses were passive. And unfortunately, passive losses do not offset active gains. Okay, so there are ways that this could have been fixed. Okay, there are some very specific regulations on what it means to be active. Okay, now you have to make sure that you meet those regulations. One of them is the amount of time that you actually spend on that business. Okay, so to be active, typically you have to spend 500 hours or more on that particular business, okay? So you would actually want to have a day plan or notes, meeting notes, whatever it is, to prove that you spent that much time on that business to prove that you were active, okay? You need to be the person making some sort of decisions, okay? If really you just handed everything over to a manager and you never touch it and you never make any decisions and you never look at it, you might be considered passive, right? This is another one of those guidelines. So if you have an activity like that, the most common place that we see this is real estate, okay? Like a rental property. For a lot of people, rental properties are passive. They're not necessarily active. But yet on tax returns, we see rental property losses offsetting W-2 income, which is active. So you really want to take a look at the active versus passive guidelines for any kind of business adventure that you're getting into and making sure, do you want this income to be active or passive, okay? Now, active income comes with its whole own host of issues, right? You might have to pay some self-employment tax. It might be considered part of a controlled group with some other businesses that you have. You know, that's starting to talk a lot of really big fancy tax code stuff. But if you guys have questions on whether something is active or passive, highly, highly, highly recommend that you sit down with your CPA and with the guidelines and figure out, is it active or passive? And can I make it, like if I want it to be active, can I make sure that it is in fact active? Okay, so super, super important that you are following both the letter of the law and the meaning of the law. Otherwise, you end up losing court cases, which is never fun. So, you know, thanks so much for joining us here today. Active versus passive is a big, big topic. So thrilled to have you guys here with us. Please ask questions down in the comment section below. We'll try and get to those as fast as we can. And if we need to film another video on active passive, we will. So remember to join us for our webinar on May 24th from 11 to noon. We're going to be going over the new tax law changes that are implemented and starting here in 2018. And of course, we'll have a registration link down below. And if you're not already a member of our Facebook group, and if you're on Facebook, it's Tax Strategies That Save Entrepreneurs Thousands. We would absolutely love to have you. We're having some really great active conversations over there. So love, love, love to have you. And subscribe and, you know, turn on your notifications and all this other fun YouTube stuff. So anyway, hope you're having a great day. We're always here to help you guys reduce your tax burdens. Passive versus active can really cause a bad tax burden if you're not ready for it. So make sure you're checking out our channel. Make sure you're subscribing. Click the like, thumbs up, share. We love getting this knowledge out and about to the world. All right, so taxgoddess.com. You can find us. You can register for our newsletter down at the bottom. Big tax drop if you're looking for a tax strategy, or STC Lite if you're more of a do-it-yourself kind of person and want those tax strategies but want to handle them yourself. So check it out, check us out, and of course, signing off with all the tax love I've got, your tax goddess and chief tax strategist, Shauna. Bye.